live, gentlemen.
Brilliant. Good morning, everyone. Thank you for joining us today on this webinar, where we're going to be discussing about getting your practice ready for MTD IT. Not MTD ITSA, it's been renamed as MTD IT recently, and where we're going to be discussing practical steps, what your practice can do and to get ready for it, and how you can reduce costs and help you deliver effective personal tax services today. So some tips and tricks for the current self-assessment season and future ones, which will hopefully lay the foundations for MTD IT. And doing the majority of this webinar presentation, we're joined by Robert Grant from Initor.
Yeah, good morning, Nick. Thanks for the handover, and good morning to our audience as well. And a special welcome to any members of the IFA. We work closely with the IFA on a number of initiatives, and I've met many of you at the regional events up and down the country. So hopefully I am a familiar face and a familiar voice. So I'm going to take you through what we're going to cover in today's webinar. It's split into two. Sorry, go on, Nick.
Robert, sorry, just to jump in, just quickly go through the house rules, okay?
Yeah.
This webinar is being recorded, okay? So please, if you miss it, you'll get a recording of it afterwards, so don't worry. Please type in the chat, ask questions. I'll try my best to interrupt Robert. So please feel free to ask some questions or share some thoughts. And please post in the chat where you're joining from. Good morning, Abdul. Thank you for joining. Go, Robert. Take it away.
Okay, thank you. As I was saying, the first really split into two parts, this webinar. The first couple of parts will all be around the MTD for income tax. I'll just call it MTD going forwards because it's a bit of a mouthful otherwise. And we'll cover the preparations that you guys as accountants in practice will be going through at the moment. The second part will really be around focusing on service delivery, cost management, and how outsourcing can help you deliver on that agenda today. So heavily focused around the aftermath of the autumn budget, any increased costs that you're foreseeing in your practice, and also maybe a different angle on the services that you may be offering your clients, because they will be needing very specialist advice in the aftermath of some of the tax changes announced last month. So really the context for today at the practice level among you accountants is, I'm sure you're going through that annual severe peak of work, and you're with a heavy heart expecting that to last until the end of January when that final tax return is filed. Interesting statistic, self-assessment was first introduced in 1997. So we've had 25 years as accountants to handle this peak of work, and we're still struggling as that deadline approaches. So what are we experiencing now? Long unsocial hours as we support clients who are leaving things to the last minute, real risk of burnout among your teams, and also increased employment costs as you pay for that overtime and that weekend working that's necessary to support your clients as deadlines loom. For those of you working in sort of sole practitioner arrangements or even smaller practice, you're extremely reliant on a small team of experts trying to help clients navigate the last few weeks of self-assessment season. But not just doing that, you're also trying to take on new clients, I'm sure, who will need support with personal tax in fairly short order. So I'm sure those smaller practices among you are experiencing a real sort of strain on resources at the moment. Every year it's high volume, it's high risk work, regardless of your practice size. Last year, around 12 million self-assessment tax returns were filed in the lead up, as at 31st of January. Similar volumes are expected this year, and going forwards, we're going to see more and more people caught by the self-assessment tax regime. We're also seeing some new market entrants and a lot more competition around the provision of personal tax services, often on a low fixed fee basis, self-assessment tax return. So on the one hand, practices are dealing with severe strains on resources, but also seeing an attack from entrants to the markets on their existing client base. And of course, margins for this work are always extremely tight, even with incremental pricing as deadlines loom and the increased costs associated with the longer hours. We're seeing those tight margins still manifesting themselves every year. So a lot to be thinking about at the practice level. And we also have at the client level a number of things to get to grips with. And really looking back at the autumn budget at the end of October, it really focused clients' mind on tax. In the lead up to the budget, I'm sure you were all dealing with questions from clients around what they should do about their pensions, what is likely in the budget around inheritance tax, changes to capital gains tax thresholds, changes to annual allowances for dividends, and also we were grappling with the basis period reforms at the same time. So there was a hell of a lot for accountants to get their head around the autumn budget to help their clients. And of course, that put additional strain on capacity as more complex advice was needed for those clients, often involving other professionals, pension experts, inheritance tax planning experts. So accountants really drawing on all of their connections to provide the best possible services for their clients. And of course, every year we see the variable record keeping by clients. Some records are incomplete, some are still paper-based, and we get that. It sounds sort of corny nowadays, but we do see the shoebox at the beginning of January with all those receipts from your sole traders. That still happens. And of course, human nature comes into play for your clients. There's often poor client engagement when they're due to pay some tax or when deadlines are looming. They leave things to the last possible minute. So getting your clients ready has always been a challenge, and even more so as the complexities of some of these tax changes come into play this year and beyond. And of course, HMRC helplines, they're often unavailable at this time of year, or you have long wait times. Some of you may recall in the summer months, HMRC decided to close down their helplines for 3 months. And that really stored up problems that are still manifesting themselves today. And of course, we have the angle around client portability and price sensitivity. Cloud accounting software has had great benefits to accountants. It's easier to keep records, it is easier to manage your clients. But of course, that makes clients more portable and extremely sensitive to price. So you can often see some churn when clients carry out their own annual review of how much their accounting costs. So a lot of context at the client level there that accountants are getting their heads around at the moment.
And I think what you would add to that, Robert, is that the accountant just seems to keep on getting squeezed, really. There's more and more pressure, more and more expectations from the clients, and prices only seemingly going downwards, right? Mm. It's so competitive these days online for self-assessment returns. So I know you're going to go into this next, but I really think the new MTD IT world, I think it will reset a lot of these relationships, and the accountant will be able to regain the value that they can give to their clients, and as such, get value back from their clients as well.
Yeah, 100%. I mean, there are many opportunities offered through the MTD world, and we'll touch on some of those as we go through the rest of the presentation. Just a reminder of what the new Making Tax Digital for income tax looks like. Affected businesses within the scope must maintain digital accounting records in a software product or spreadsheet. There's no real change in the amount of detail that needs to be maintained, but it needs to be in a digital format, which could be a challenge for some of your clients, especially sole traders who may be sort of averse to the new digital world. Your clients will need to submit quarterly updates to HMRC using compatible software. And I know there's a lot of testing going on around at the moment, and HMRC are every day approving new software providers to provide that arrangement. And of course, clients will still need to finalise their tax position after the end of the tax year. 31st January, following the end of the tax year, will still remain the sort of final submission date. And for those outside MTD IT, the self-assessment tax return will likely be replaced with a new but similar system. We're not sure on the detail of that, but of course you will still have many clients who have that single deadline of 31st of January to submit their annual tax return. So really a bit of a call to action today, and it's for those accountants who maybe haven't done this yet, but really embed those effective self-assessment tax return processes to flourish in the new MTD world. Look critically at your tax return clients, your prices and your margins. Think about what you have to do every quarter and promote bookkeeping among those clients who may not be used to it yet. It's also time to disengage those loss-making clients and maybe introduce more incremental pricing as deadlines loom. You might need to update engagement letters to state client responsibilities in a new MTD world, and that's to maintain records digitally and submit them quarterly. And also look at monthly subscription options. That will give you a more regular income flow as you have more regular contact with clients throughout the year, so they can see the benefit from some of those increase in fees if you're able to introduce those. And of course, client communication may need to be re-engineered from the accountant side. I would urge you to automate that where possible, using an appropriate CRM commercial software if you can. And also look at outsourcing parts of that data collection, such as UTR numbers if your clients don't have them, or even registering for self-assessment with HMRC. There are opportunities to look at different ways of communicating with your client and who carries out that work. Get your clients ready through effective record keeping and prepare them for the new digital world. Make sure they understand the deadline-driven nature of the new MTD world as well. And of course, we have the points-based penalty system. You'll need to let your clients know about that and the impact on them if they do miss a deadline throughout the year or for filing a final tax return. And of course, looking at the sort of margins that you're making now, make sure you can retain them and look to increase them by 2026 if possible. Sorry, Nick, did you want to jump in there with a question?
Yeah, just a few points just to add. I think firstly, I think a lot of accountants are apprehensive or afraid of the pricing discussion, but I think they should take comfort in the whole accounting industry will be having these conversations with those clients. If your client is cost conscious now about paying the self-assessment just for a self-assessment return, they're definitely going to be cost conscious when MTD is rolled out. So maybe have those difficult conversations earlier, so then you don't kind of hit your head one short sharp punch in 1 month. And I think the communication thing is key, because don't just see it as an opportunity to communicate about MTD but see it how you can communicate lots of different things from your services perspective as an accountant. Start doing it now. You could tell them about the additional services that you do, or booking those face-to-face meetings. It could, as I said, a real great opportunity to reset some relationships that you have with clients. And as an accountant, if you're filing the returns in January, the horse is already bolted. So maybe by having these quarterly touch points, you can start having the conversations with your clients before the deadline has happened, and actually give them insight and value that can affect their tax position today. Just thought I'd add that, Robert.
Yeah, I think that's right. And the more clients that you could move quickly to a digital platform, way in advance of April 2026, the better, because you will have a more efficient, practice on your hands and a more efficient offering that clients will understand the value of, because they will see, regular communication flows, regular updates on their tax position as well. Don't underestimate the value of that. If clients find the tax bill when the draft return's prepared, whenever it is, they find that sort of tax position a surprise. Using these digital platforms can help them keep track of their tax position throughout the year. So there are many benefits to that for clients in terms of managing their own finances.
And I was reading a forum a couple of days ago, Robert, and on the position of getting your clients to use digital bookkeeping, and I saved the quote. And someone said the software fees for the bookkeeping software that the client will pay is tiny in comparison to what the accountant may have to charge the client if they were to do the work as well. So I think that's how you got to really position it to your clients is, look, you could be paying £5, £10, £15 a month for this bookkeeping software. okay? And, start educating them how to use it. But the alternative is, I, as an accountant, could charge you for this work, and the fees could be 3-4 times higher. So I think giving your clients those choices of the kind of, well, you can do it a bit yourself, and that's the costs involved, or I can do it, And where you will be supported as the accountant is if the client doesn't like it and leave, they're only going to be confronted with all other accountants offering them the same position, really. Buy bookkeeping software, do some stuff yourself, or we'll do it. But these are the costs associated. So I think MTD IT will really be a leveler in those kind of conversations. And I think don't be afraid to start discussing how those services will look like and have those discussions with those clients now. So then that kind of first step isn't as large.
Yeah, even the most basic bookkeeping software, it is super efficient. They use bank feeds, they use sort of automatic expense recognition and classification and things like that. So we're not saying the accountant is going to have all this work landed on their desks. It's more around introducing your client to those more efficient ways of maintaining records and using the accountant's time more valuably to provide those insights into a client's tax position that they may need. And just on that, the final point on this slide is, when the client is ready to move to that digital platform, an outsourced provider like Initor Global, we can help update those digital records, get them ready in the cloud. We can help accountants review their workflows and the way they communicate with clients. We can help with that. And also, if you're already outsourcing work such as bookkeeping or year-end accounts preparation, we can build on those workflows anyway. So this could be a very smooth option to sort of, free up the accountant's time to engage more with clients and just outsource the admin side of things to update digital records. So I'm going to rest my voice for a moment and hand over to maybe Nick for the first poll.
Brilliant. So the first question is, how prepared is my practice to deliver MTD IT? A, completely prepared. B, making progress as planned. And C, not ready at all. So I think a lot of people are taking the approach to this very differently. Again, I was reading this forum, and a lot of people are threatening to retire. I heard the same noise about MTD VAT as well. Some people are waiting for software vendors to take the lead on that, and then they will react to that situation. So it's interesting to see what the audience is going to say. And we've got a quick question. What about sole traders such as taxi and delivery drivers? They can't afford high fees while they're making not more money from minimum wages. The thing that I would add to that, Suleiman, is if they're going to fall into the threshold of, I think it's £20,000 by the end of the current parliament, I think.
That's right, yeah.
They should firstly see that why wouldn't they want to have an insight into their incomings and outgoings? Okay. MTD IT is going to manage digital record keeping whether they like it or not. Okay. So you can position yourself as trying to help them and to solve that problem. Okay. Either they could use the bookkeeping software, pay £10-15 a month, and you help them with that, or you do the work for them. Like, I know, I agree with you, it's probably not fair. They can't afford to pay fees, or they're not making that much money. But that's the reality that they face on the ground. Now, what we're trying to advise you on this webinar is there's certain levers that you can pull that can help you keep those costs as low as possible, i.e. getting them to do it themselves. Using an outsourcing provider to reduce your costs so your fees don't go up as much. There's no easy answer to that, Suleiman. But by conditioning them and saying what the relationship will be like, at least you're preparing them for the future. And how they deal with that, you've given them options.
I wouldn't even add anything to that. You're spot on, Nick. And maybe the commercial software, sort of bookkeeping software market will become
Capium. Conveniently. Suleiman asks what the threshold for MTD is, and do you want to answer that, Robert, while I go?
I've got a slide on that, but just to answer the question directly, from April 2026, it's based on income. This is important. It's not based on profit. It's based on income. That affects sole traders and landlords in sort of the first tranche, and the level of income is £50,000. And then in 2027, that reduces to £30,000. And the Chancellor announced in the autumn budget, in the detail, that by the end of the Parliament, the ambition was to get it down to £20,000. That's income. So basically, all of your sole traders are going to be caught by this in due course. So the more lessons you can learn just now and the more effective frameworks you can put in place, the better over the next 3 years. And I'll come on in a bit more detail about what you can do about tracking the direction of travel of your clients and things like that to understand who's going to be caught and when.
And an interesting point is whether this will add to inflationary pressures as well, because your taxi driver, to pay for his higher costs, may raise his costs. So I'll save that discussion topic for another day. But anyway, I thought I'd just throw that into the mix.
Okay.
So how prepared is my practice to deliver MTD IT? 2 are completely prepared. If you are those 2, please share how you're feeling completely prepared and what have you done. I think we'll be fascinated to know. Making progress as planned, and about 45% aren't ready at all. So it seems to be a mix between making progress and not ready at all. Please share in the chat what you're doing to get ready. What is your plan of action? I think other accountants would love to know and maybe compare their plans to your plans. Let's do a bit of thought sharing. I think that would be great. But yeah, please carry on, Robert.
Brilliant. So I'll run you through a quick MTD update now and some areas of focus for you accountants as this regime rolls out. I touched on a couple of these sort of bullet points in responding to questions, but just a reminder about what MTD for income tax is all about. It's all about real-time reporting. It's all about reduced admin, and it's all about increasing tax revenues. What the government has aimed, across the whole MTD agenda, is to reduce errors in returns through improved record keeping and a wholly digital format. They're also looking to reduce admin burdens on small businesses. And I take the point in the earlier question that it doesn't seem like it for some of those sole traders who are maybe involved in a sort of heavily cash angled business, but that's one of the stated objectives of MTD. And it also aims to raise additional tax through error reduction. So that's really the sort of 3 prongs of the MTD framework. Some things won't change. It's also worth sort of mentioning that underlying income tax rules, they won't change other than when announced by the government at each budget. The amount of detail submitted to HMRC, that isn't going to change other than it must be maintained in a digital format. And the current deadlines for filing final returns and paying tax when it's due will remain for income tax going forwards. HMRC estimates up to 2 million taxpayers will be affected. Those will be self-employed, mostly sole traders for you guys, and landlords as well. So 10 million taxpayers will still file the annual self-assessment tax return. So there's still going to be a lot of work to do to get those guys ready as well. The income thresholds I mentioned, I'll just set them out there, moving downwards from 2026, from 50,000 through to 30,000. And by the end of the Parliament, that will reduce to 20,000 if the government's plans move to fruition. So again, you might want to introduce that to the conversations with any new clients you take on, just to lay the ground for the expectations around how they maintain records and the work that the accountant will need to do going forwards. The government is committed to the April 2026 commencement date. That seems to be now fixed. There's no date yet for partnerships to comply that I've seen, but that will come. And HMRC continue to update the rules around MTD. So some of the key dates, just building on some of those earlier comments, the first quarter for online submission starts on the 6th of April 2026. The first quarter ends 5th of July 2026, and that must arrive with HMRC by the 7th of August. Now, buried in the detail of the MTD for IT framework is that businesses, i.e. sole traders, could elect to report for calendar quarters. So while the reporting would be 30th of June, the submission date is still the 7th of August. So it doesn't really make any difference, but it's worth knowing there might be a little bit of leeway there if they elect to report on a calendar quarter basis. The first final declaration for the tax year 26-27 is therefore due on the 31st of January 2028. And the tax payment deadlines remain the same throughout MTD. 31st of July for payments on account, 31st of January for those final payments. So there's no change on when tax is due. So we had some updates earlier in the year. This was back in February, but again, worth mentioning. When the MTD for income tax framework was being consulted on, there was something called an end of period statement that was required between the submission of the final quarterly statement and the actual finalised tax return. That's now been dropped. It was seen as an unnecessary step. Quarterly returns are now going to be made on a cumulative, that's a tax year-to-date basis, rather than a standalone quarter basis. That's probably good news for accountants, so they can correct any historic errors throughout the year. At a very detailed level, foster carers are now outside the scope based on their qualifying care income. That's good news. And exemption for those without a national insurance number is automatic now. It doesn't need to be applied for. If you've got landlord clients, they can choose not to submit quarterly updates of expenses if they finalise those for jointly owned properties towards the end of the tax year. And more than one agent login will now be allowed. That recognises that some businesses have more than one advisor. They may have an advisor for the personal tax, and they may have an advisor for the sole trader accounts and things like that. So more than one agent login will be allowed under the changes announced earlier this year.
And just to add, Robert, that was one of the biggest hold-ups why MTD IT didn't go live earlier, is the multiple agent approach. HMRC just wasn't able to deliver that in their current infrastructure. So that's why they've delayed it. Quick question. Is April 2026 finalised? How do we determine 50K? Will that be based on the turnover from 24 to 25? It's as finalised as anything the government says, I suppose. Based on my attendance in some of the meetings, there is no talk of a delay to it. They seem to be making good progress in their pilot scheme. I think a lot more certainty will probably be done from April this year to see how many people have enrolled on that and whether there's snags on that. But you've got to plan as if it's happening. The 50K is based on all sources of income, okay? And I believe it will be based on the previous year's turnover. Is that, Robert?
I think that's right. The income from a sole trade business is reported on tax returns at the moment. And the HMRC will use that information to identify affected taxpayers, and it's also incumbent upon accountants to identify taxpayers who do have income from sole trade, who maybe have never done a tax return in the past for whatever reason. But it's really, ethically, accountants should be urging clients who are caught by this regime to comply with it. Okay. A little bit of ethics never goes amiss in a presentation like this. So just a reminder, if you need it, and really to communicate this with your clients, it's a points-based penalty system. Just a reminder about what that's around. It's the taxpayer that accumulates separate points total to VAT. So if they are already submitting information under MTD for VAT, they will accumulate points separately for income tax as well. 1 point is accrued by the taxpayer every time a filing deadline is missed. And it's a £200 penalty when points threshold is reached and for every subsequent failure. And the thresholds, frankly, are pretty low. So if you miss a final tax return, you'll immediately have a 2 points against sort of your threshold, and 4 points threshold for missing a quarterly obligation. So if you don't file anything all year, you're very quickly going to accumulate the points towards the threshold for a penalty payment. And just a reminder, if you've got clients who have more than one sole trade business, multiple businesses, a return is needed for each one. And you accrue one set of penalty points, which is at the taxpayer level. So if you have 2 businesses, 3 businesses, and you miss a return for one quarter, then you accumulate 2 or 3 points, depending on the number of businesses. Points expire naturally after 2 years for annual returns and 12 months for quarterly returns. And of course, there will still be late payment penalties on a sliding scale up to 4% of any tax owed. So that sort of just reinforces that there still will be financial penalties if you don't pay your tax on time. Okay, so move on to some action for accountants going forwards. I mean, it's been a bit of a theme of the discussion so far, that it's really important that as we come to the end of the 2024 tax season and looking ahead to next year, that you embed those processes as you deliver self-assessment tax returns. Learn as many lessons as you can around those clients who are really struggling to get the information together for you in a timely way and in an organised way. So if you've had to communicate with those clients more regularly or speak to them personally, make sure you understand what you need to do going forwards to make that process as smooth as possible. And that may be around data collection. It may be around identifying those clients which need more regular communication. And one of my earlier remarks about automating that as far as possible, try and work towards that over the next 12 months. I know we're getting towards the end of 2024, but always aim for early completion and early filing of tax returns as far as you can. Hopefully you're on top of that at the moment. And just remind clients, they don't need to pay their tax until 31st of January. As long as they get their tax filed well in advance of that, they've got a bit of leeway to get the funds together to pay their tax bill. Segment your client database in as much detail as you can. It may be time to disengage those clients that are not making any money for you at all. And think about things like, how do clients keep their records just now? Who aren't using digital platforms or who might never feel comfortable using a digital platform? Which clients need the most help with the transition? You should be understanding that, having got this far through the 2024 season at the moment. And remind clients that paper records are no longer accepted. So you need to segment your client database as appropriate. And also notify clients around their responsibilities for maintaining digital records. You may need a new engagement letter if that's necessary, and that engagement letter can set out the expectations around communication and any adjustments to fees that may be needed. Systematic communication is definitely what to aim for, whether that be SMS text or automated emails. Make sure you have a CRM system that's fit for MTD purposes. That's if you have a CRM system. There's lots of commercial options out there at the moment, very low cost as well, and certainly it can be a time saver in terms of maintaining your client database and also communicating your clients at key points in the tax year.
Yeah. And I think just to add on to that point, Robert, the hardest step with a CRM, right, is the first step. Once you've done that, you can automate the quarterly reminders. You can automate the newsletters or the updates, or there's practice management software that can do the deadline reminding for you. There are so many tools out there that can help, but that first step is the most important one. Just a couple of quick questions have been posed. I just want to address them. Will you get a copy of this PowerPoint emailed to us? Yes. Robert and his team will share that afterwards over email. And someone asked, is Capium ready? We are on the development list. We're currently getting the production credentials for MTD IT, and we're very close to releasing our Capium 365 product, which is for the end user for MTD IT, but also all users who want to do invoice scanning, receipt scanning, bank feeds, bookkeeping. It's all encompassing and probably appropriate now that Dex has been bought by Iris. But anyway, that's enough of Capium. Please carry on, Robert.
Yeah, after that short commercial break, we shall carry on. So really just continue with actions that accountants can be taking now. In terms of prospective clients that may come to you seeking your services, make sure you gatekeep those clients carefully. Check their eligibility, their threshold levels going forwards, and for existing clients, identify those hitting those thresholds over the next 3 years. And of course, now that we have this additional administrative burden for sole trader businesses and landlord businesses, a limited company might be a better option versus a self-employment arrangement. Every client is different. It will depend on their individual circumstances, whether they have the appetite for the sort of more legalistic and statutory framework for a limited company, but it may well be a better option for them going forwards. Not much help around sort of dividend tax and things like that at the moment, but on a case-by-case basis, you should be having those conversations with clients in any event. And test those workflows to death and make sure that you have a software that is able to be compatible with HMRC requirements to submit those quarterly returns. You may need bridging software if your clients are using a simple spreadsheet or very basic bookkeeping software, but make sure that you have all that in place. And Nick mentioned that there's a lot of testing going on with commercial software providers at the moment. It's been a theme of this discussion. Keep reviewing the scope of services that you provide, when you provide them, and your pricing arrangements. Certainly, when I was in practice, while pricing or fee discussions were always difficult, if you can justify that through improved customer service or providing additional services, then clients see the benefit of it. The HMRC beta has been open for testing from April 2024. There was very strict entry criteria for that, and HMRC reported very low numbers were on the uptake for that. There's new private beta testing opening in April 2012, and accountants may wish to seek to participate in that. HMRC has promised a dedicated team for this new private beta testing from April next year, and it also lets you show clients that you're ahead of the curve in terms of getting yourself ready for MTD for income tax and how you can help them navigate that as the deadlines for implementation approach. So there is some action you can take at the moment to help clients, get them ready to sign up for MTD for income tax on a voluntary basis, if appropriate. If their income threshold is below £50,000, they might want to sign up for it in any event. Get clients comfortable using bookkeeping software, especially first-time users who may need the most support as they transition to the new regime. And of course, you'll need to get that HMRC compatible software that I've mentioned on a number of occasions throughout this presentation. Get your clients ready for quarterly record keeping. Get them into a routine with automated reminders and sort of automated confirmation that everything has been completed successfully. That will really gain dividends going forward so that your clients can be comfortable and secure in the knowledge that they're actually complying with the new regime as well. Learning and knowledge, that should be updated throughout the year. Offer online training for any clients that might need it, or write some blogs, or provide articles that can help your clients, prepare their records at the end of every quarter. And of course, compliance is key to avoiding penalties. So keep your clients on the straight and narrow as much as you can and make sure they meet those deadlines as they're looming. There are some exemptions to MTD for income tax, similar to the VAT arrangements, that they're unlikely to apply to many of your clients. It's for those that have a lack of internet connection in certain parts of the country. But HMRC has said they will look at this on a case-by-case basis, but I wouldn't hold out much hope of getting an exemption for your clients at the moment. And of course, use your experience to deliver the new income tax regime. Apply those lessons that you've learned from VAT. They need to maintain accurate, up-to-date digital records. Is always at the heart of MTD, regardless of which regime your clients find themselves in. The challenge is always going to be greatest for those clients who don't currently maintain digital records. So make sure you understand those clients' needs and how you can support them. And get your clients ready to start using accounting software or bookkeeping software now to record their income and expenses. That will help them prepare for the new MTD for income tax regime. And those quarterly or more regular touch points really are invaluable in helping your clients understand how they're coping with the new regime as well. So I would say at least quarterly is needed. It might just be an automated email inviting them to get in touch if they've got any problems, or it may be a quick call if they haven't submitted information that you expected. And of course, use this as an opportunity to lever in any additional services that's needed, any bookkeeping or tax planning as well. We're not saying you have the most sophisticated sole trader clients. They may not need complex advisory services or anything like that, but some may certainly need basic bookkeeping services, which you could easily provide. And of course, manage your client risks. Disengage those clients that you think are going to be too much effort to get through the new regime, or who may already signal that they have no intention of complying at all. Review your pricing. This is a great opportunity to introduce monthly subscription if you don't already follow that sort of fixed fee approach. And of course, aim for early filing in 2025. If you've already achieved that in 2024, well done. But make sure that you embed those lessons learned for next year as well. Carry out a resource review across your practice, not just accountants and their expertise, but non-accountants as well, who may have that client-facing role that's invaluable for getting your clients ready to submit information each quarter. And of course, look to build capacity to deliver all of that regime through outsourcing. I'll talk in a moment or two about exactly what you can do, the work that you can outsource now that will help you prepare for the new regime going forwards. Okay, I'm going to go on to the sort of last part of the presentation now. I know that we have a poll coming up, but certainly when I come back online, I'll be talking about how to deliver those effective personal tax services, how you can reduce costs, particularly in the aftermath of the autumn budget, and how Initor Global can help you outsource work that will help your practice deliver. So we're on to the second poll, if I can hand over to Mimi and Nick.
Brilliant. So I think there was a lot of anticipation leading up to the budget, and there's been a lot of I wasn't going to give an opinion on it, but negative noise post-budget. So what impact has the budget had on your business, and what action have you taken? A, not taking any action. B, additional investment in technology. C, recruitment freeze or reduction. Or D, considering outsourcing work. I think what we'll be interested to know, and please share in the chat, is what are you advising your clients, and what actions are you taking as a firm? Because there's definitely a consideration you have to take, or actions you have to take because of the budget. So it'd be very interesting to hear people's thoughts on that, if you do have.
Yeah. I mean, the purpose of putting this slide, I've been talking to a lot of clients over the last month or so, and accountants are small businesses themselves. They employ a lot of people, at various roles, different levels in their organisations, and accountants are going to be hit by the NIC increase as much as their clients. And it was interesting talking to Initor Global clients about what they're doing to cope with that. So I was just really interested in what the audience are doing themselves.
No, agreed, Robert. Agreed. Okay, so let's look at the poll. Open. Okay, so quite a lot of people who are not taking any action. I'm assuming that's as a firm, but I wonder what you're advising your clients. More people, about 25% have invested in technology. About 16% are doing a recruitment freeze or actually reducing their headcount. And about 25% are considering outsourcing. That's a real mixture of results. Yeah,
it's quite an even spread. And it's interesting, those that are not taking any action, it may well be that, your practice is working almost at capacity at the moment. You've got really good demand for your services. really good clients that are comfortable with fee increases and things like that. But we know there are pinch points in the market at the moment, especially around new trainees, new graduates, and so on, and also sort of the more niche areas of an accountant's work around sort of audit and advisory and things like that. So yeah, I guess the responses reflect that sort of broad chops that we have as accountants in terms of dealing with different clients. Okay, I've put on this slide again. It was following discussions with some of our clients about, what is the detailed impact of the NIC increase on your your establishment. And I used the Hayes Salary Trends 2024 document, which is probably out of date already. I just took the London FTE for various, grades of individuals that you may have working at your practice, from a manager right through to a bookkeeper and payroll managers and administrators. But when you look at the increase and put the employment allowance to one side at the moment, I've ignored that. But this, after the threshold reduction to £5,000 and also the increase to 15% is taken into consideration, even at, at levels around sort of bookkeeper and so on, an essential service that's provided by many accountants, you're looking at an annual increase for a typical £40,000 bookkeeper salary of about £1,000 per year. Now that is a lot to claw back in increased sort of fees among your clients when they may already be extremely sensitive to any increase in fees at the moment. And of course, the escalation becomes quite stark when you get to the sort of qualified accountant level and the manager level in your practice as well. And also compare that if you were to outsource that work on an FTE basis to Initor Global. So, taking the bookkeeper, we would provide that for around £40,000 for the FTE equivalent. And at the manager level, if you wanted a qualified accountant to work sort of alongside your onshore team, that would be around half the price. So it's just food for thought that any of you who are in the 25% who are considering outsourcing, that this might help you in your decision-making process. So what personal tax work should you be looking to outsource now? We're helping clients at the moment getting their sole trader clients registered with HMRC, and also those who don't have UTR numbers. We're happy to get onto the HMRC chat lines and waiting queues to get that information on behalf of agents. We can also help with data collection for your sole trader clients, get them ready for that quarterly submission, and make sure that it's uploaded onto their bookkeeping software at the end of every month is always a good system and rhythm to get into. We can help with the tax computations and make sure that you have those ready to have your discussions with clients, and that can be happening on a quarterly basis going forwards under the MTD regime. We help partnerships with SA 800 preparation and also the SA 100 tax calculations I've just mentioned for individuals. A lot of accountants have approached us around historic expense claims, i.e. prior period returns, and we're able to do that as well. That can be quite resource-intensive work, especially if there are 2 or 3 years of claims to be prepared on behalf of an employed client who's looking to claim back some historic expenses. So we are helping a lot of clients with that as well. If there are any HMRC queries, we're happy to field them and make sure that we pass on the information to our clients. We can help with filing as well when that personal tax return is ready to be filed with HMRC at the end of the tax period. And some of the benefits of outsourcing work, I've touched on those a lot as I've gone through the presentation. Just looking back at the autumn budget, those of you who are finding the employment tax increases difficult to handle in your practice, then outsourcing parts of your work can help mitigate that increase as you move forward. You have an access to a pool of talent. We have over 100 accountants working in our offices in Ahmedabad in the Gujarat region of India, and we're happy to help over 120 UK practices at the moment with their outsourcing needs. You also get that tax expertise when you need it most and when resources are most scarce throughout the winter months, when those deadlines are looming. But that may be needed on a more regular basis going forward once MTD really gets embedded. We provide admin support, as I've mentioned, to contact HMRC and also to contact clients for any missing information or missing records. That work can be extremely resource intensive, and we're happy to carry that out on behalf of our clients. It also helps you manage that peak of work and save time and resources when you need them most. If you think back to my earlier slide, you significantly reduced costs, around 50% of the cost of a typical UK resource, regardless of the grade and experience of accountant that you may be seeking. It also helps you with effective pricing. If you use incremental pricing or throughout the tax season, our prices remain fixed, so you can gain some significant margins for those clients who are quite comfortable paying additional fees as the 31st of January deadline approaches. It also helps you make the most of the investment in technology. Around a quarter of you said you were doing that anyway, but those sort of cloud-based accounting arrangements, we can access that from our bases in India and through your servers, so making sure that your data is secure. So we can help you, get a better return on your investment in that technology. And of course, most of our accountants are qualified, or they're working towards a qualification, or they have bookkeeping and payroll qualifications as well. So your quality and compliance is assured in everything we do. And of course, if you're already outsourcing, then taking the step towards outsourcing personal tax work is quite an easy step to take. So getting towards the end of the webinar now, what do we offer? We offer a free, no obligation trial of our services. So that's typically 2 self-assessment tax returns or up to 10 hours of an accountant's time. That would be a tax accountant for personal tax reasons. We'll guarantee we'll turn around that work within 72 hours, so you can experience the fast turnaround times that we promise throughout all of our work. You'll have experienced professional teams carrying out the work who can work alongside your onshore team as well. And I mentioned our prices remain fixed throughout the SATR season. We have customised pricing, which we'll go into in a minute, based on the complexity of the return. And we also promise effective onboarding and relationship management as our relationship develops throughout the term of our contracts. We are GDPR compliant, and we recently had the ISO 27001 accreditation re-awarded, so you can be rest assured data is always secure, and we can remotely access your practice server, or you can use our secure servers using Dropbox, things like that, if you would prefer. So what do we offer? If you need a senior tax accountant going forwards, you can see the prices there. And we also offer a half-time equivalent basis as well. In terms of the tax returns, the prices, as you would expect, are fixed and based on complexity, from simple right through to complex. But that is most basic. A simple self-assessment tax return for a sole trader would be £63.75. And then we move through to the more complex self-assessments. If you need capital gains tax calculations, or maybe they have income from dividends and things like that, as you would expect, those increase in fee as we go through the complexity of return. And we also offer tax return packages, which we can talk to you about on a case-by-case basis. So almost the final slide for me. If you would like someone from Initor Global to call, just click option A. If you'd like us to contact you maybe when the tax season's finished, option B, no thank you. If you are already comfortable with the way things are going, that's absolutely fine as well. But we will promise you a call back if you go for option A or option B.
Brilliant. Thank you for that, Robert. I'm going to open up the forum now if there's any questions or anything you would like to ask myself about Robert. I just wanted, there was a quick question about, is the government planning MTD for limited companies? As I mentioned in the chat, the march towards making tax digital will be all-encompassing, but when we'll get there, maybe 2030, so I think there is the agenda for quarterly submissions or updates for all business entities or types in the UK. I think it's inevitable. So I think we just got to grapple with it. I don't think there's any questions coming in.
Okay.
But just to quickly say, look, my name's Nick Cheney. I'm a director at Capium. If you have any questions or want to ask me anything directly, please message me on LinkedIn. Capium is a cloud-based accountancy software. I know lots of you use us, but please do go to our website and check us out. And I'd like to thank you, Robert, for this detailed presentation. And the slides have been shared in the chat, so they're there to be accessed, and a recording will be shared afterwards. And Robert, I'll leave you the final words.
Yeah. So just I'll pick out the final bullet point there. That in terms of our work, outsourcing really is here to stay. We offer a ready-made solution to deliver your personal tax work. We promise you a smooth transition to MTD IT if you're not quite ready for it. We can help you mitigate the impact of the autumn budget on your employment costs. And our overall aim to help clients is always to reduce their costs and increase their efficiency. Thanks for listening. If you want to contact me directly, there's my email address, or you can contact the expert team over at Initor Global. Visit our website, lots of useful information on there around MTD and our other services. Those of you who are maybe not ready for the digital world can give us a call by the old telephone route as well. I'm on LinkedIn. Feel free to connect. I'd be delighted to hear from you. I think the voice just about held out, Nick. I think it's probably time I kept my voice down and hand it over to you to close it.
You can now have a glass of water. I think it's been well earned. But look, thank you everyone for attending. Thank you especially those from IFA who have joined as well. Please look out for future webinars co-hosted by Robert and I, and Initor and Capium. Enjoy the rest of your Thursday. Take care.
Yeah. Okay. Yeah.